Right, good afternoon, everyone. This is Michael from TI, and I'm just welcoming you to the European Road Freight Rate Benchmark for Q4 2021, brought to you by IRU, Upply, and Transport Intelligence, TI. We'll just wait a few more moments for the attendees to stabilize, and then we'll get on with the webinar. Okay, it looks like attendees have stabilized now. So hello, everybody, and welcome to the European Road Freight Rate Benchmark for Q4 2021 from IRU, Apply, and TI. We're very pleased to have you here today to discuss the outlook for road freight rates and what's really been going on over the last quarter in freight rate development. A little bit of housekeeping for us today. We're going to be running the session for about 30 minutes or so with the presentation. We'll take a look at the European picture as a whole, and then we'll dive into the detail of individual lanes as well. And then after that, we'll finish with a Q&A session. So please do feel free to submit your questions via the Q&A app, and we'll do our best to answer as many questions as we can at the end of the session. So please feel free to submit them as we run through the session, and then we'll go through them each in turn at the end. Now, also, I should say that it's been a very interesting time, of course, in the European road freight market over the last few quarters. In fact, we're obviously operating in a market under quite extreme cost pressure at the moment, and we've seen lots of rate increases quarter after quarter, taking us to record highs again, really across Europe. So it's very much a market in which we're dealing with high costs, high fuel prices, high labour costs, a bit of a capacity crunch in terms of available capacity as well, and new trucks coming into the market to help ease that, as well as the drivers. So it's a very interesting time. There's a lot of volatility, and we're looking ahead to see how rates are going to develop over the next quarter, as well as telling you really up to the very recent past of what's happened. So I'd like to take you and introduce you to our panelists, really, to show you a little bit about what's really happening, what's driving change in pricing, and our expectations for the future. Before I introduce that to our panelists, I must say that we have to remind you all that discussions and statements made by participants on commercially or strategically sensitive information may fall within the scope of competition law and be considered as unlawful. And therefore, we invite you to refrain from sharing any information of such nature or entering into any such discussions, including during breaks through the webinar. But that notwithstanding, we're very happy to introduce myself as your host today. I'm Michael Clover, I'm TI's Head of Commercial Development, and I'm joined by Nathaniel Donaldson, an economic analyst at TI. Hello, Nathaniel.
Nice to meet you, everyone.
Thank you. And for those who don't know, TI is a market intelligence firm focused on providing strategic insight on the logistics and road freight industry. Now, we're also joined by our partners today, Thomas Leroux from Apply, who's the Chief Executive Officer there. Hello, Thomas.
Hello, everybody.
And Marianne Savoni from IRU, who's a Senior Manager covering strategy and market intelligence. Hello, Marianne.
Good afternoon to all. Hi.
Now, I'll also ask Marianne and Thomas to just introduce their organizations in case you don't know. So Thomas, perhaps let's go first, just give a quick introduction to Apply.
Yeah, thank you. Very briefly, Apply is a company that work on providing data and market insights to the world, to the supply chain industry. And more precisely, we are collecting data regarding the prices of freight in road freight, air freight, or sea freight. And here the focus is on road transportation in Europe, collecting this data between shippers and freight forwarders and providing it to the markets.
Okay, thanks, Thomas. So we're very much looking forward to digging into some of that data today. And Marianne, could you just give a brief introduction for IRU for those who don't know the organization?
Yes, so very briefly, IRU is an international road union representing
road transport, both goods and passenger, in more than 80 countries worldwide. And we have a membership composed of both national associations, but also international corporates operating in both logistics and mobility.
Okay, thank you, Marianne. Great. Well, without further ado, then I think it's time for us to take a bit of a look at the data here. And we'll start off by looking at the overall index of price growth across the European market. We cover in this webinar the whole European market really, but this shows us the overall development. And I think the most striking thing to start with is the steep increases that we've seen in the last couple of quarters in the general trend over the last 18 months, 2 years or so. But Nathaniel, perhaps you'd like to just take us through that size of growth and also introduce us perhaps to some of the demand side issues driving that.
Yeah, no problem. So we have definitely, as you can see, we've ended the year at an all-time high. So we're now at 108.3 on the index. Now that's up 1.1% on the previous quarter. And we can actually see that it's up 5% or 5 index points on the previous year. So what this means is that we've actually ended on an average of 1,106 euros. So that's the average cost of a European road freight route. And if we're looking at that in terms of kilometers, that's €1.56 per kilometer. So like I say, it's higher than we've seen before since we go back to the start of 2017. Just briefly, in terms of the previous trends, we can see that actually there's been constant increase and constant growth since the start of the pandemic. We can pick out 2 areas where we've seen a fall, that's in Q2 2020 and then Q2 21. And both of those are times where we've seen restrictions across Europe, and that has then we've seen caused demand to fall, and we've seen a 1.9% drop, a 1.9 point drop in Q2 of 2020, and we've just seen a small 0.1 drop in Q2 of this year. So that's after large restrictions that saw consumption and retail fall across the continent, and then that's been seen in the fall in the index there. So in terms of the determinants, we're seeing both demand side and supply side determinants that have caused this trend that we're seeing, especially now into Q4, which sees a lower rate of growth than the previous quarter. Now, Marianne can take you deeper into the supply side, but demand side, you know, we've actually seen that we're back into areas of growth after the fall of rates in Q2, and we're seeing German order books actually at the highest level since 1960. So there's definitely the demand for the manufacturing there, and that's causing increased demand on the continent. We're then seeing UK retail 7.2% higher than pre-pandemic levels in Q4, again causing high demand from the UK, higher consumption causing greater demand for road transport there. While we're also seeing growing industry in both France and Spain with positive PMIs in the final quarter, they have actually been limited by shortage in supplies, bottlenecks in supplies, and the IMF does expect these shortages to actually constrain growth into the new year.
Yeah, so thanks, Nathaniel. So I think it's quite clear that there's a strong aggregate demand recovery as Europe gets back to something like normality after various waves of Omicron. But one thing that's also very interesting on pricing at this point is the supply side issues and cost side issues. We've got some good data to show you that on fuel price development and on driver shortages and costs as well. So Marianne, I don't know if you could take us through some of the supply side issues that are driving up rates at the moment as well.
Yeah, sure. So dealing with operating costs, I will first speak about the diesel prices and then on the driver cost side. In terms of the diesel prices, which account for 1/3 of the total operating costs, have risen sharply, ending 2021 around 25% higher than at the beginning of the year in all EU countries, as you can see on the graph. You can see as well that there is an acceleration of the increase starting on this September of 2021. Indeed, the petrol prices have climbed in line with the oil Brent market prices, which have in fact more than doubled from about $40 a barrel a year ago to about $90 a barrel currently. Mainly driven by indeed the sudden rise of the energy demand since we could say middle of 2021, and the strong economic recovery with the GDP that we all know of the last year, which was about 6% in EU, globally speaking. The Energy Information Administration forecasts that these oil prices are expected to remain high, in average $75 a barrel for 2022, meaning that the demand expected is going to be higher than the production of oil, and the consumption of petroleum is expected to increase by 3.6 million barrels a day in 2022. So yeah, this is globally what we can say on this diesel price situation. And just to finish on this, UK, as you can see, it's the country with the highest price on December 2022. Yeah.
Yeah, so I think that's something that all companies really experienced. And personally at the pumps, we've noted that as well. So that's putting a lot of pressure on costs, of course, and we're seeing that really come through to rates. But obviously, something else having a big influence on it is, of course, another major factor in logistics costs, which is the driver salaries. Partly that's driven by the real shortage of drivers, and got some fantastic new data from IRU here on those shortages in 2021. Marianne, could you take us through that?
Yeah, so when you have a look on the map that you have on the screen, you can have a look on the overview of the driver shortage in EU in the major countries at the end of 2021. And you observe that there is up to 100,000 driver shortage. We have this estimation thanks to the feedback of our members, national associations representing the industry in their country that are receiving this feedback. So this is giving an idea of the level of the shortage as of today. UK is the country with the highest driver shortage, with up to 100,000 drivers missing, followed by Germany and Poland with at least 60,000 drivers missing. The driver shortage is notably concerning small and medium-sized transport operators. This is the information we are collecting from our network. We know that the small and medium transport operators represent 80% of the market, and these operators are struggling, in fact, to increase driver wages to retain or attract new staff. And as a consequence of this situation of driver shortage, the trucking revenue in EU for 2022 is estimated to decrease by 5% at the end of this year, as the trucking supply is struggling to meet this increasing demand. And so this is putting pressure on the whole economy, and notably knowing that indeed we don't have any information that the driver shortage is going to improve at the end of this year. Yeah, so this is what we can say on this situation of driver shortage.
Mm-hmm. Yes, certainly a very interesting situation, and obviously, as you say, lots of measures to try and combat that, but ultimately it seems like quite a persistent problem we've had for a number of years, and it's getting worse now. Now, actually, as we go through the rest of the presentation, we'll be highlighting some of the effects of these supply side issues in individual lanes as well. So we'll be looking at that, not just in the aggregate effect it's had on European rates, but also as we go through to individual lanes. And obviously, if you're interested particularly in some of this driver shortage data or the rate data, we will be sharing the report with all the registrants at the end as well, which I forgot to mention at the start. But the next phase of the presentation really is to dive into the individual lanes, and we have this particular map here which shows some of the different lanes covered within the webinar and the report, to show you a bit more about the scope and the overall sort of European picture here. And actually, I know there have been some developments at Upply in terms of the data collection and coverage and so on. So Thomas, would you like to tell us a little bit about that? Yeah,
thank you. To begin with, I will just answer to one question, that is, here you can see the flow of all the indexes that we have built for this webinar. Here we are only talking about full truckload for general cargo. We have data, and on Upply you can find data for preferred truck, for LTL, and have different aggregate and different view. Here the idea is full truckload, general cargo, to be easier to read directly on the webinar. And here indeed you can see some inbound and outbound between countries. We have, before the before index was an aggregated view on Europe to have a global view. Here you can look closer on the combinations between countries or internally also. And we are building new indexes at Upply on a monthly basis regarding the new data and the new partners that we have.
Fantastic, yes. And that's really what all the data from the webinar is based on. So let's dive into some of the individual lanes now here. So here are really three of the highest volume lanes in Europe, looking at international lanes here. So we have, first of all, Paris to Madrid and the Madrid to Paris lane as well. Nathaniel, could I just explain some of the volatility that we're seeing there and what's driving that change?
Yeah, definitely. So I think this is an example of quite a volatile lane. We're actually seeing the second consecutive quarter where the lanes have switched. We've got the backhaul and the head haul switching. Now, this is because there was a 3% increase in the rate of the Paris to Madrid in the final quarter, and that actually outpaced the increase in the opposite direction. So Madrid to Paris during the same time increased by just 0.3%. In terms of the rates. Now, the result is that we end the year with an average price of 1,451 euros for a Paris to Madrid route and 1,434 for the Madrid to Paris route. In terms of the overall trend, we've seen the Madrid to Paris falling since the early, since early 2019 and into the pandemic. And then a strong French economic recovery has really seen that rise again as rising costs, limited supply, and improved improved demand has improved that in the second half of the year. The Madrid to Paris, has been much more turbulent over the previous 18 months due to a quite varying and uncertain supply and varying demand as well. So we've got limited supply there in that lane, which we have spoken about and we said will pop up in each of these. So in terms of the manufacturing, Spain's manufacturing PMI has slowed. So it peaked in April and then we've seen it slowing, which has caused a bit of a reduction in the demand, as we can see that was in Q3. However, it's still strongly in the it's still strongly in the growth area. So we're still seeing that pushing rates up in terms of the demand into Madrid. And then we've also got retail increasing in Spain by 5.9% over 2021. In 2021, so we see further increase there. And then Spanish consumer optimism is high going into the new year, shown by a McKinsey report. So we can expect this increasing in Spanish consumption and consumer demand to increase into the new year.
Yeah. Well, I could see lots of things driving growth across that particular lane there. And there's sort of different stories, I suppose, for each lane. Looking at Warsaw to Duisburg as the next one, Nathaniel, and could you take us through some of the drivers there? Yeah, so on the Warsaw to Duisburg, both lanes actually end just marginally higher than last year's number. So we end the year on an average cost of 1,077 euros, Warsaw to Duisburg. So that's just €1 higher than the previous year, if we're looking on year, and we're still looking at €1 per kilometre there. And we're looking Duisburg to Warsaw in the opposite direction. It's a bit of a larger increase, 1.5% year on year, but that's considerably below the average across the continent of 4.5% in that period. And that's then now ending the year on 0.96 euros, so that's 96 cents per kilometre. In terms of the route, this one's a really important one in Europe. So it's the trade between Germany and Poland is second only to that between Germany and the Netherlands. Polish haulers make up 20% of European road freight, and actually with Poland's bilateral trade, they make up 93% of the market share, and as well 33% of the market share across the EU as a whole. So we've seen Polish manufacturing in strong growth during the final quarter of the year, actually up to 56.1, its PMI, from 54.4 in November, so it ends very strongly in December. This means we've seen the Polish economy providing German industry with strong supply of intermediate goods. Meanwhile, the German sector, firms, like I said, detail from Commerzbank says that they're actually at their highest level on their order book so far. However, their
their exposure to the global supply chain, and especially part shortage, means that they're struggling to reach the output levels necessary to meet the demand. So we're definitely seeing the demand from Germany there, from Polish goods. But German manufacturing is in a positive and growth area, while for the PMI, however, its composite PMI is 49.9, so it suggests the demand from the rest of the economy is still falling behind. So we got retail, services and construction are struggling to provide the demand for the industry.
Yeah, we saw an interesting, economic sort of downturn in Q4, I think, for Germany, didn't we? So still to see pricing going up, even though the overall economic condition is maybe not that good, is interesting to see in terms of a bit about the capacity issues we're having and the cost issues we're having in the road freight market. Now, the third chart we have here is looking at Duisburg to Lille and the rate development there. And again, we're seeing some rises there. So there's a common theme on the market at the moment. But Marianne, could you just take us through what's driving that?
Yeah, so as you can see on the graph, the both lanes saw a strong year-on-year growth on the Q4 2021. Lille to Duisburg rose 4% when compared with the final 3 months of 2020, while the cost of transport from Duisburg to Lille was 9% higher in the last 3 months of 2021. In fact, the positive developments in French manufacturing and the consumption during the economy's recovery in 2021 have helped push rates higher on the Duisburg to Lille lane. We can also, as I said, also the same trend on Lille to Duisburg lane, which is mainly driven by the rise of finished good consumption combined with the supply side challenge that we see in Germany, as we just discussed before, which is one of the countries the most concerned by the job shortage. And then we can say as a third factor that the diesel prices were 27% higher than at the beginning of the year. So this is explaining this trend that we observe on the two sides of the lane for the last quarter of 2021.
Yes. Yeah, all right. Thank you, Marianne. So again, we're looking at factors driving up pricing there. So we're looking now at a lane where we've seen a very significant change in pricing, actually. And this is another lane involving Germany, but basically looking at the price of road freight from Antwerp and Rotterdam on average to Duisburg and on the backhaul. Nathaniel, could you take us through what's driving this?
Yeah, no problem. So as I mentioned on the previous example, now this actually includes the Germany and Netherlands route, which takes the top spot as the most important road freight route across Europe. And this, I think, is a really good example of Germany's exposure to the global supply chain. And while we see that demand is high, we've still got a good demand and rates increasing from Duisburg to the ports, especially year on year. We're seeing a change of story. So there's a large increase, Duisburg to the port. So year on year, that's 6.5% now. That's quite a large increase above the average. The average across Europe is 4.58%. While if we're looking year on year, ports to Duisburg increase a more modest 1.5%. So Duisburg to the ports, we're seeing that global demand is encouraging a movement of goods from Germany into the ports to lead to its global destinations. While we're seeing that Germany is actually struggling and not putting in as much demand, is struggling with its supply chain problem to fuel its industry. So what we can see is that the backhaul route actually responded more quickly with an immediate drop at the start of the pandemic, and they've actually stayed low until it's starting to recover now in 2021, and we're seeing that now. The head haul route on the other side responded quite slowly. We didn't see that initial drop to the pandemic, but it did cause a drop overall. Now, rates started the year at their lowest point since Q1 2019, but we've now seen them climb back up, and then the year actually above the end of 2020, but they've not yet reached the heights of the middle of 2020.
Thank you, Nathaniel. Very interesting to see what's driving that that growth as well on the particular lane. Now, I think it's time for us just to turn to some of the other rates that we have available, because so far we've only really looked at international lanes, and actually Upply's data set is enriching as always, but we're now able to see some domestic rates as well. So we're looking here at the Upply freight index. This is looking at French domestic rates and overall growth again increasing. Thomas, could you take us through this?
Yes, this is an index that we publish every month, and we send it to our subscriber directly. Talking also about spot versus contractual rates, here you can see a mix of both, but we also analyze the spot on the side and contractual on another one. Here we have a lot of effects that are mixed. We have, of course, the increase of the fuel prices. We have the fact that France is peaking right now. The latest forecast regarding the increase of GDP in 2021 is close to 7%. And then we have also driver shortage, but we already talked about it. And lastly, I wanted to talk also about another variable in the total price of the truck. That is, of course, the driver and the salary of the driver. And here we are in discussions in France. The unions are asking for a 10% pay increase, while the discussion seems to goes on the 5%. But anyway, if we are at 5, 6, or 7, it will have an impact on the following months and years. And of course, this will lead to an increase in prices globally.
Mm. Yes, and it's likely then to exert upward pressure as those discussions continue as well. And so this time as well, we're also able to provide some data on the index for domestic rates in another country, in Spain, on this occasion. And Marianne, perhaps you could talk us through this.
Yeah, so here you can see that the rates in the Spanish domestic markets fell 6% year-on-year in Q4 2021, and were 3% lower compared to the previous quarter. In fact, while the signs are positive, we just said that at the beginning of the webinar, in terms of growth and economy, notably coming from the manufacturing sector, notably the automotive sector, with a PMI recording 55.8 in December. The falling rate that we see on the graph is reflecting, in fact, a remaining lower economy activity versus the pre-pandemic levels, 6% smaller than in 2019. And in the meantime, we observe the cost increase, such as the diesel prices, 25% higher than at the beginning of 2021, which has led, I think that you have heard about it, to strike action in Spain on November, asking the government for support in dealing with this higher fuel prices increase.
Yeah, thank you, Marianne. It's very interesting to look at different countries, obviously backing the general trend a bit there, but lots of local domestic factors which are obviously leading to that sort of pricing dynamic as well, which is why it's so important to get into the individual, country data and lane by lane data. Now, in terms of our investigations of individual lanes, the next one we'd like to move on to, and the final one in our presentation today, is our lane to watch, which is the cross-channel trade, and particularly GB France trade this time around. Obviously, it was one with a bit of focus on as the sort of next wave of Brexit changes came in January, with customs checks being put in place and customs declarations required from January 1st. And expectations around stocking up before that, potentially, and some disruption as that's introduced, as well as obviously the driver shortages and the fuel prices and so on, which affect the UK very acutely. But Nathaniel, could you just talk us through the change in the pricing there, and how you think those factors have influenced it?
Yeah, no problem. So what we're seeing here is definitely a large increase on the backhaul route. So when we're looking at GB to France, whereas we've seen a more turbulent France to GB here, we've actually seen a 10.8% year-on-year increase for the GB to France backhaul route. That's now costing an average of €929, or €1.38 per kilometre. And the result is actually an 11% increase since in Q1 alone. So we saw that the cost was immediately immediately held by the carriers and then held across the year. Whereas there've been more reactionary on the front haul route, which has seen a 2.75% increase year on year, ending the year at €1,363. So 1,363 euros, and so that's actually its second highest average price. In terms of the determinants, research from LSE, the London School of Economics, shows that British companies said additional border checks, extra admin, and extra administration and extra admin charges heavily affected the UK doing business with Europe. And actually, they were immediately passed on, immediately fell, and this carried on through the year. The backhaul route has stayed more stable, with only a slight increase in Q4, but with more legislation coming in, it's likely we'll see more disruption, with the cost likely handed over to the UK companies. In terms of the economy, it showed a recovery during the same period, so we've also seen demand increase. Retail sales were at pre-pandemic levels, and they're now less affected by COVID restrictions. So we can now expect that to continue into the new year, with demand to push rates upwards. As well as that, the UK has, like as Marianne said, up to 100,000 driver shortage, and it's also affected by the COVID pandemic with isolation, a very active job market that will continue into the new year, and then Brexit causing a loss of 14,000 to 16,000 EU national drivers. However, the UK government is working to reduce the effects of this shortage.
And Marianne, is there anything else you'd like to add on the cost side or on the driver shortage issue?
Yeah, I just would add that, in fact, the strong demand has driven up the wages. In fact, the driver gross pay surged 18% in the last 9 months of 2021 to retain the existing staff and attract new drivers. But however, the small fleet operators are still not back to the full fleet capacity, with high difficulties to offer the matching higher wages to retain and attract the new staff. So yeah, we can see this 18% increase of driver gross pay, which is quite interesting, I think, to mention for this lane. Yeah.
Mm-hmm. Yes. Brilliant. Well, thank you, Marianne. Yes, it's expecting that sort of high cost situation to continue, even as measures are taken to try and alleviate the driver shortage and so on. So it's going to be a difficult period probably for the next few quarters, really, on the UK lanes and across much of Europe, really. Now, we're having a lot of questions coming in, which is fantastic, and we'll try to get to as many of those as we can. But it's always worthwhile, before we dive into that, to give a bit of a methodology summary as well, which hopefully Thomas will be able to answer some of your questions that have been coming through in all grouped together on that. So Thomas, could you just take us through the sort of methodology of what
Exactly. I'll be very quick, but I will try to answer many questions that are almost the same. So first, here, this is full truckload, only general cargo. We have mixed spot and contractual prices, and the fuel is included. This is the big part. The map that you see over there is the coverage that we have at Upply, meaning that on this webinar and on the report that we'll send at the end of the webinar, we have selected some lanes. We cannot put everything. We have selected the most interesting from our point of view, but you can have access to additional data on Upply and additional indexes also. And we have data regarding reefer bulk. Here, the reefer part, the bulk or others liquids are not included, once again, in these data.
Brilliant. Yes, thank you, Thomas. Helps us clarify a few things there. And I think, also in answer to a few of the questions about data frequency and so on. Obviously, in the report, we cover the market on a sort of quarterly and sometimes on a monthly level, but Apply do have that more regular data available. And I also see some other questions coming through about things like contract lengths and purchasing behavior, that sort of thing. And TI has lots of research available on those kind of things. If you'd like to know more, then of course you can just get in touch with us. Now, we'll move on to the Q&A session now. I think Thomas has done a good job there of answering a few of the questions about sort of what the data availability is. So please do contact Apply if you want to get some of those breakdowns that Thomas mentioned on type of cargo, type of transport, and so on. But we'll move on to the Q&A session. And I think looking through some of the questions here, I'm seeing an awful lot of questions coming on about the mobility package and some of the changes introduced yesterday, and how they're likely to affect rates and cost development in the future. Marianne, I think you're probably best placed to answer some of those. Would you like to give an answer to some of those questions about how that's going to affect costs?
Yeah, so maybe the two things I wanted maybe to specify here is first, if there an impact of the mobility package on the driver shortage. It is too much early to answer this question as of today. We believe, of course, that the situation that we see on the driver shortage and on the top, the enforcement of mobility package 1 is going to let a situation tense for sure. To say that it is going to increase driver shortage, it is a little bit early to specify this element. The impact of the multi-package enforcement on the cost is something that we are currently working on. In fact, you all know that today is the entering into force of the driver posting rules, exactly today. And in fact, what we are going to publish in the next quarter is in fact the impact on the driver cost, and notably the impact on the cost of posting rules and the increase in terms of administrative formalities. We are going to work on the impact on these two aspects. For the next quarter or the next webinar, we will come with estimations on this impact. The situation is quite very different according to the different EU countries. So we will try to give an estimation which is the most clear depending on the different countries, and at least if it is not all the European countries, the main ones. So this is something that we can communicate and give you as an estimation for the next one. And also just to finish on this one, as IRU, we are a lot working with the European Commission on these different enforcements of the mobility package. And we are a lot working these days on, making or giving more clarifications on different aspects, such as, for example, the classification of the infringements, for example, or the manual registration of border crossings. So different points that we are working on with the European Commission and with our members via working groups. And if some of you want more information, we are glad to share exactly what we are doing on this.
Yes, thank you, Marianne. I think that deals with quite a few of the questions that we've had. Obviously, a very important issue looking ahead to the next quarter. And as Marianne says, something we'll be focusing a lot on within the next report and looking at the impact that's had. But certainly, an expectation that's going to be applying upward pressure really on trends there. We've got a few other questions here around capacity issues within the market and quantifying that as well. Generally the data we have available, which is not really included in the report itself, but data on TI's dashboards and data reporting tools shows obviously a significant capacity crunch. And the outlook for that with the driver shortage issues, and of course with also the issues around new trucks coming into the market with manufacturing disruptions and shortages of parts and so on. We expect that kind of capacity crunch to continue, but you'll find there's more specific data on that available through TI's data platforms. I see some other questions as well about cost per euro per kilometre and distances on certain routes and things, and within the white paper, the report that accompanies this webinar, which will all be sent after the presentation, you'll find some references there to the price per kilometre on those different routes. So I'd encourage you to take a closer look at that if you want to understand more on that side as well. And obviously that also contains the data on the costs, road freight costs as well. So you see costs broken down by fuel and labour costs and other costs of road freight operations. So a couple of questions on there as well asking about that. You can have a look at the report to find the more specific data on that as well. But of course, if you have more detailed questions around those kind of cost influences and how labour and fuel prices are changing and that sort of thing, and again, that's something that certainly at TI we have available in our databases. Okay, we have a few other questions. I see Thomas has answered a few through the chat feature as well. But there's one interesting question here, which is looking at the geopolitical tensions we're seeing in Eastern Europe with Ukraine at the moment, and how we expect that to affect things. Now, obviously, that's a complex question to answer at this stage. Certainly, we would say that disruption, on the continent is obviously likely to have many supply chain disruptions as well. So if there is conflict there, we'd expect that to have an upward effect on rates. But one particular area that could be problematic there is that with some of the schemes to try and incentivize international drivers or non-EU drivers to come and supplement the EU drivers, particularly for the UK. Ukraine and some other Eastern European countries have been seen as a way of getting more drivers and filling capacity. So obviously, if there's conflict there, that may cause issues with actually getting those drivers in. Could cause further disruption there. But I don't know if anyone else has any comments they'd like to make on that one, if you prefer not to comment on the situation in Ukraine and the effect on rates. No, I'll take that as a no. I can see why people would want to pass up on that one. Yes, and just looking at other questions then. We've got another one here looking at pricing per route. So again, I think on routes, cost per route and so on, that's where you'd need, if it's not covered within the report, to go and contact Upply. They'll be happy to help you with some of the other data that's available within their systems as well, to get that more specific data available. And yes, some other more practical questions. We'll send out the report, of course, at the end of the webinar, but we'll also be very happy to share the copy of the webinar recording itself, which will be sent out. It will probably take an hour or two to put together, and then you'll be sent that. You'll be able to download and watch again, or share with colleagues if they'd like to take a closer look at that as well. Okay, well, I think we've covered most of the questions we've received. A lot of them were covering the issues around the mobility package, really, and cost factors. So as I say, I encourage you to check out the report for those. Obviously, you can see here the contact details for the various organisations. So if you have more questions about mobility package, IRU would be very happy to hear from you. If you'd like to learn more about the data that's available on these road freight rates, then you can contact Upply. If you'd like more analysis and data on costs, or indeed on the wider road freight markets development, then Transport Intelligence will also be very happy to hear from you and see if we can help. So with that, really all that's left for me to do is to thank the panelists. Thank you, Nathaniel, Thomas, and Marianne, for your views today. And thank you, all of you, for joining us while we go through freight rate development over the last quarter. We hope to see you next time. All right, bye-bye.